Hello and welcome to Trading 5 Talents. In today's video, I want to cover the topic of pattern day trading. Now, this is a topic that a lot of new traders and new investors have questions about, so I hope to bring a little bit of clarification to this particular matter. So let's define what a pattern day trade is. According to Robinhood's website, a pattern day trade is when you buy and then sell the same stock, or you open and close the same options contract within a single trading day. So that is considered a day trade. Now, one of the things that sometimes gets a little bit confusing is just the term day. And it doesn't mean 24 hours. It simply means a trading day. So from market open until market close. So it doesn't mean 24 hours. Now, pattern day trade definitions are important because what can happen is if 4 of these day trades are made within 5 trading days or 5 rolling days, that triggers a rule called the PDT rule, the pattern day trade rule. And what this rule does is it restricts the trader from day trading for 90 days. But you can still trade. You just can't day trade. You can still open a position, you can still close out your current positions, but you simply can't do it within a trading session. That is, you can't day trade for 90 days. Now, this only applies to accounts that are less than $25,000. So, for example, if you get hit with the PDT rule, but your account closes above $25,000 within that 90-day restriction period, you can begin day trading immediately. I'd like to also point out that this doesn't apply to cash accounts that are less than $25,000. So if you have a small account, less than $25,000, but you don't use any margin, you don't use Robinhood's instant settlement or instant deposits, then this doesn't apply to you. But in most cases, less than $25,000 in your account, you have this day trade restriction where you can only trade 3 within 5 days, and that 4th one is going to trigger the PDT rule and restrict you from day trading for 90 days. So let's take a look at some examples to see what a day trade looks like. So remember, this is the trade of the same security in the same trading day. So it could be the same stock within the same trading day, or it could be the same exact same option within a single trading day. So for example, I just want to, instead of using, example ticker symbols, I'm just using green and red for open and close, respectively. So if you buy a stock or you buy an option and then you close it, that's what is in red, that equals 1 day trade. Okay, so you buy and you close within a single trading day, that is a day trade. Now, if we do the opposite, which is what we do here when we trade the wheel strategy, we're selling to open and then we're buying to close. If you do that in a single day, that's also a day trade. So it doesn't matter if you buy first and then close, or if you if you buy first and then sell to close, or if you sell to open and then buy to close. Either way, it's considered a day trade. All right, now here's an example of where you've already owned, or you already own, let's say, some amount of shares of a stock, and then you buy more. Okay, you already own some, then you buy more, and then that same day you sell off some of that stock that you already own. Well, that's still considered a day trade. So again, if you're seeing a pattern, if you've got green on one side of the arrow and red on the other side of the arrow, that's considered a day trade. All right, so here's another example. Let's say you close a position. Okay, so you sold it. That's it, the first red, and then you bought even the same position. All right, that's not considered a day trade because you're closing a position that was already open the previous day, and now you're opening a new position. So if you stopped right there, that wouldn't be a day trade. But if you close that position you just opened, that's considered a day trade. So that would be the same as example 1. It just depends on when the trade starts and when the trade ends, or when it opens and when it closes. Right? So this other example is you're buying in multiple lots. So let's say you buy 10 shares and then, a few hours later you buy another 10 shares and then you sell all of them at the end of the day. That's just 1 day trade. Right? So it's not 2 day trades. Even though you bought twice, it's still considered 1 day trade. Right, this one's also considered 1 day trade. You buy and then buy a little bit more, and then you sell and then sell a little bit more. That's still only considered 1 day trade according to the brokers. Right, in this example, you're opening a position, that's the green, and then you close the position within the same day. Of course, that's a day trade. That's just like example 1. But if you open a position again before the end of the day, that isn't considered a second day trade because, again, this is initiating a new position. You closed out your old position, which was the day trade, and then now you're initiating a new position, and you can close it out the next day if you wanted to. So this is sort of the reverse of option 4 or example 4. So again, anytime you've got a change of direction in this security, that's considered a day trade. So in this chart, anytime you're going from green to red or red to green within the same day, that is considered a day trade. And remember, you can only do 3 of those within 5 days in order to avoid the PDT rule. So how else can you avoid the pattern day trade rule? These are some ideas. First thing you can do is turn on pattern day trade protection if your broker offers it. So again, I use Robinhood. Remember, there's a link down in the description. If you sign up using that link, we both get free stocks. Otherwise, if you're using Robinhood, you don't know what pattern day trade protection is, let me show you how to do it on desktop, and then I'll show you how to do it on mobile. Okay, so here we are in Robinhood. If you go over to Account, and then you go to Settings, okay, and under Settings, you go over here to Investing, and then right here, pattern day trade protection. Mine is off right now, but if you wanted to enable it, just simply click on that and then you turn it on. And once you turn it on, you save it, and now your pattern day trade protection is on. So what this says is, if you enable pattern day trade protection, we will prevent you from placing trades that will likely mark you as a pattern day trader. Protection can't guarantee that you won't be restricted. If you are marked as a pattern day trader, you may place day trades only if the value of your securities and cash is above $25,000 at the end of the previous trading day. So one way to avoid the PDT rule is simply to turn it on here. Okay, let me show you how to do it on the phone now. So if you tap here on your profile, tap up here in the menu bar, and then you go to Investing. You scroll down to the bottom, and you have your day trade settings. So if I tap on day trade settings, then I have this option to toggle on the pattern day trade protection. Again, you can see mine is off, but if I tapped it, then you can see that it would be turned on. Okay, so that's how you do it on mobile. Okay, the second way you can avoid the PDT rule is you have your pattern day trade protection off, for example, but you just keep an eye on the day trade counter. Now, if you are under $25,000, I would not recommend only using this second idea. I would keep your pattern day trade protection on just for protection in case you lose count for whatever reason. So keeping an eye on the day trade counter is also useful even though you've got the protection on. And so this is how you would do it. Okay, so you're in Robinhood, you go up to your account and you go down to Investing in this account bar, and then you scroll down to the bottom and you can see this little block right here. It says day trades, and right now there's one. I made one day trade on Lucid Motors. But once this fills up, obviously these are your 4 that's going to trigger the pattern day trade rule. So again, a day trade is a purchase and sale of the same security on the same trading day. Because the value of your stocks and cash is over $25,000, you are exempt from day trade restrictions. Now this is going to be different if your account is less than $25,000. And so it's going to keep track of how many day trades you're making, the 4th one triggering the rule. So I would, if you're under $25,000, I would recommend enabling the protection and then also keeping track just so you know where you stand with this day trading, and so you can plan your trades accordingly. All right, now over in mobile, it was in the same place you had your day trade protection on. You click on your profile and then you can scroll all the way down to the bottom of the page and you can see the day trades. Here is where we can enable the day trade protection with the day trade settings, but also you have these same 4 circles indicating, if they're empty, obviously it indicates that you have day trades still left to do, or still left to make. And if they're all full, it will tell you which ticker symbol you traded on, and actually if you tap on the symbol, it'll go over the trade confirmation or the trade order that you did. All right, the third idea to avoid the PDT rule is simply to build your account to greater than $25,000. Now, of course, as a new trader, this is what we're all trying to do. We're just trying to grow our account. This is going to take time, so in the meantime, turn on the protection and keep an eye on the day trade counter. You can also deposit more money You can make safer trades. If you want to learn more about the type of trades that we do here at Trading 5 Talents, we use the wheel strategy where we sell premium, we sell options, and we get that premium. If you want to learn how to do that, there is a playlist on the wheel strategy, and then there's also other separate videos on different tips and tricks on how to trade this particular options strategy. Another idea, and this is what I did quite frequently when my account was below 25,000, is I would just exit the next day. So I would open a trade, and then I just knew that I was not going to exit it until the next day. So I might sell something that I knew I just wanted to get in and out of, and so I would sell it before the end of the trading day, and then I would simply buy to close the morning of or sometime during the next trading session. So even though it was less than a 24-hour period, it wasn't the same trading session, therefore it never counted as a pattern day trade, or it didn't count as a day trade. So that's one thing that you could do if you're looking to just scalp some premium, or you're looking to scalp some profit, is start the trade on day 1 and then end the trade on day 2, even though it's within 24 hours, as long as it's not the same trading session. Another idea is you simply don't use margin or instant deposits on Robinhood. Now, what margin is basically you're taking a loan from your broker, in my case Robinhood, and you're borrowing that money in order to place trades. Now, if used correctly, margin can really leverage your account and you can really multiply your profits, but if used incorrectly or you place poor trades, you can also multiply your losses. So if you're new to trading, I would not recommend margin. And if you don't like the idea of borrowing money to trade and leveraging your trades, then obviously you wouldn't want to use margin. I do in my accounts, but if I were in the position where I wanted to really avoid this rule, I may opt not to use margin so that I would only have a cash account. So with a cash account, you just have to remember that there is an instant settlement, so you're going to have to wait a few days for that cash to become available to place the next trade. So that does slow you down a little bit if that is a concern to you. So if you have any questions about this topic or about selling options in general, just leave a comment down below or ask it over on Twitter, and you can follow me at Trading 5 Talents, and I'll answer it as quickly as possible. In the meantime, if you want to learn more about the wheel strategy and how I use it for lifestyle trading, click on the subscribe button and turn on the notifications so you can catch all the updates. Until next time, trade wisely and take care.